right, welcome back to the Alex Health and Real Estate Show. Today we're going to be talking about the latest in Nashville real estate, some stats and info from November. But before we do that, Alex, we are in full-on Christmas movie season. Not just Christmas season, we've touched on that. What is your favorite Christmas movie?
Favorite Christmas movie is Home Alone, the first one.
Okay. Do you like the following ones? I feel like two is respected. I don't even know how many there are. There's probably 15 or something.
Yeah. No, I don't know about. I think there's at least a 3 and a 4, and they are they're no good.
Okay, you're original. Well, I'm kind of original too. I would say my favorite is probably The Grinch, original cartoon. Yeah. I don't want to see The Grinch as like a real person actor. The Grinch is a cartoon. So give me the original Grinch. The kids love it.
I like it.
And so we go back to The Grinch more often than any other Christmas movie.
Is that right? As a family?
Yeah.
Not just you?
Not just me. Surprisingly, maybe for you, I don't just sit alone and watch Christmas movies.
Interesting. This is not the vision I had of you at your home.
The kids are usually the ultimate determining factor, and we've introduced them to a lot of the classic Christmas cartoons, and that's what they go to more than anything.
Good deal.
I enjoy it too. So, all right. If you comment with your favorite Christmas movie and ask a question that you'd like us to cover on a future podcast, we will enter you into a drawing for some Nashville Predators tickets. So please do that. And Alex, what do we have this month? It is the end of the year, so I guess the next...
So all I have to do is go online, comment on my favorite movie, give us a topic that I am interested in hearing about, and you'll enter me into winning Preds tickets.
Yes. Upper bowl, top row, like they're terrible seats. I'm kidding. They're actually really good seats.
They are really good.
Everybody that has gotten them.
I don't know from experience, but I am told that they're really good tickets.
Everybody that's gone has said, wow, those were amazing seats.
Yeah.
So, yes, that's all. On YouTube is where you need to comment.
So what about this month?
This month, November, is wrapped up. Give us a little summary of what happened in November from a real estate perspective.
Yeah.
For people that are here to just kind of check in on what's the status of the market, what's the trajectory, give us the high level overview, and then we can drill a little bit deeper for those that want to stay.
So I think what people are really wanting to know is like, is the market going to crash?
Yeah. I've been asking that for 6 months or more.
Since March of 2020.
Yeah.
Right?
Yeah, pretty much.
But for different reasons. Mm-hmm. It's because things have felt volatile, over are we good?
Yeah, we're good.
Or can these folks hear us okay?
Oh, yeah. Loud and clear.
All right. It's the same question since COVID, and that is just, it feels a little volatile. There's a lot of news going on. And is the market going to crash? That's what people kind of generally want to know. And or has it crashed? And the answer in November is no.
Right.
What we're experiencing and what we're seeing on paper and what I expected to see more of 3 months ago hasn't happened. What I'm experiencing is that it seems to me like values of certain homes has gone down 10, 15% in some cases. But the numbers market-wide show us that the median price is really holding steady.
Yeah. There's
been some minor fluctuations over the last, call it 6 months. There was a bump early this year. And then since then, it's been kind of steady. So the market hasn't crashed. And then another question, maybe we can get into this after we go over the market, is why isn't the market in a free fall? Mm-hmm. Is that fair?
Yeah, because it seems like the impression I get from a lot of people is everyone's just holding their breath, waiting for the free fall.
Yeah.
And they're running out of oxygen probably at this point because we haven't had it yet. And then, like you said, there's always something that's going on that makes... anybody could go, well, is this the thing that's going to send the market into a spiral?
Yeah.
So give us the numbers.
All right. I'm going to stand up.
Give us
Go
the
over the
numbers.
numbers.
There is a couple numbers that could feel alarming or even are alarming. Doesn't mean we're in the price crash, but
I'll go through the numbers. You call those out, and we can have a little conversation about them.
cool.
So this is for month ending November in Davidson County. Closings were down 45%.
All right, I'm calling it out. That's a lot.
Dude, that's so much.
That is a lot. That's versus last November.
Yeah, that's versus last November.
So that takes into account the seasonality that you may experience year to year throughout the year.
Yeah.
45%.
45%. Close to half as many homes are selling now as 12 months ago
Okay.
in Davidson County.
Feels alarming, but we'll get there.
Yeah. The median price, we can talk about it now if you want.
I think it relates to the conversation you said is why isn't the market in a free fall?
Yeah.
And so let's get there, but I mean, there's a lot less deals happening.
So the thing to talk about then is just, is really supply and demand, and how do number of transactions differ from value of those transactions.
Yeah.
All right. So we're not going to talk about it now. Median price for these homes that have sold is up 13% over last year.
Okay. Which is above historical averages that we expect.
Historical average
receding.
is 3 to 4%.
There was a time where that number was like 30%, 25, 30%.
Not too long ago.
Things were crazy. So it's receding because we're essentially staying flat,
Yeah.
give or take.
I think I'd have to go back and look at the market video that we did from January, but I think this was essentially called it like over the course of 2021 was probably 28 to 35%. And we said this year is expected to be probably in the range of, a lot of folks out there were saying like 10%. Mm-hmm. And then the Fed did what the Fed did, which is beginning to aggressively and rapidly increase interest rates. And we thought we might see anywhere from a 5% decline in values all the way up to 10%. Mm-hmm. So we're at 13 into November over last year in Davidson County. Over the last 3 months, transactions are down 34% compared to the same period last year. Median price for those homes is up 14%. Year to date, transactions are down, call it 20%, and values are up 20%. Mm-hmm. So this is probably the clearest picture of, if we're trying to give a little bit of a, just here's how numbers typically work in the market 12 months ago, 10, 11 months ago. We're going, okay, just because the number of transactions goes down doesn't mean that prices go down, because it's really, same as up here, it's all about supply and demand. Mm-hmm. And the biggest thing that we talked about offline, we'll go ahead and talk about this now before we get into Williamson County, is why is the market not in a free fall? Mm-hmm. And there's several factors. One of the biggest reasons is because of supply and demand. So if a home is worth, we'll just take this median of 450 and say, if a free fall price, everybody's got a different free fall price, but if free fall price is 350,
yeah,
the owner of this home, if they need to sell at that price, is then going, I'm better off to stay here.
They'll figure out a way to keep it, it seems like.
Maybe I'll rent it. Maybe at that price, for whatever reason, I'm going to choose to either stay in the home or I'm going to choose to rent it and keep the home. I'm not selling anymore.
Right.
So if that weren't the case, if there was unlimited supply, then things would be in a free fall. There wasn't unlimited supply in 08-09, but there was way more homes that were vacant.
Mm-hmm. Not rented, not lived in, just sitting there.
Not being used and owned by banks who could afford to say, essentially, whatever the free fall price is, if it gets these off our books and we can get some cash, we're not really in the real estate holding business, then, I mean, if you made a reasonable offer, they would oftentimes take it.
They were in liquidation mode for all these homes that they took. We just don't have that environment this year.
So that's not the environment. You don't have all these vacant homes. And I'd love if we had like some specific stats on how many vacant homes. We talk about this kind of offline on these videos. We're talking more kind of like the idea.
Well, I can say from I looked into it last month, and the numbers are really staggering as to how many homes were owned initially by individuals.
Yeah.
Who knows why they bought them to leave them vacant. But then you get a situation where I've got this vacant home and now I need money. I guess I'll just part with it or whatever. The pricing gets a little more fluid.
It's a cash flow issue.
Yeah.
Most of us aren't prepared to weather a storm of holding on to a vacant home for months and months and months on end. Mm-hmm. So you cut your losses and you sell at a free fall price.
Yeah. And with a primary residence, giving a bargain price doesn't help in most situations because they're going to have to either go rent something, and rents I've seen are going up.
Yeah.
Or they're going to have to buy another thing and probably not get a bargain price.
Right.
So they're better figuring out how to stay there.
Yep.
So you got less new homes coming on the market.
Yeah. So the reason that it's just a different environment. You don't have as much supply, and you don't have an environment that, my understanding is that is going to feed into that supply drastically ticking up anytime soon.
Yeah, okay.
So inventory in Davidson County in all price ranges is up. Inventory is slowly creeping up. The number that we typically will see with inventory when prices stagnate is going to be 6 months supply. We're at about half of that on average for all inventory in Davidson County. Jumping over to Williamson County, as usual, the numbers are similar enough. Closings in November were down, call it 40% over last year. Median price in Williamson County is up 26% over last year. Over the last 3 months, closings are down 25%. Median price is up 20%. It's so interesting how just historically Williamson County outperforms Davidson County when it comes to real estate appreciation. Mm-hmm. Year to date, Williamson County is down 16% and median price is up 23%. So similar story. It's about, Davidson Williamson down 20% in transactions. Our expectation in 2023, as we're getting ahead into, is that those transactions, at least for first quarter, probably second, continue to drop and are probably over the course of the year half the number of transactions as we had in 2021.
Okay. So this 45% drop number, this in November, probably we're going to see a lot more of that.
Yeah, this is probably going to stay steady, and then this time next year, this is probably going to be, that's not going to stay steady. It's probably going to be 50% of what we had in 2021. So this may stay steady for another month or two, and ultimately this time next year, this is probably going to be at, maybe 30%, something like that.
Yeah. Okay.
Inventory in Williamson County in all price ranges is also up. Generally speaking, I've been, just observing what we've been looking at the market, talking to other agents. It seems like in the last 30 days there has been, and we've been reading some news-related things that say that the buyer sentiment has ticked up in the last 30 days. But these guys I'm talking to, they're basically saying, seems like things under 2 million in the last 30 days, like started moving again. Everything in the 2 and up is the buyer pool there is still less active than under 2 million. So for whatever that's worth, that's kind of a little bit of a threshold for pricing.
Yeah.
What else?
I mean, did you want to say anything more about the market's not in free fall?
Yeah.
I think you mentioned kind of looking ahead to 2023. Predicting pricing is always dangerous. I think overall we can say whatever sort of happens with the price, this median price gap is probably going to continue. It's been slowly ticking down as the growth of last year kind of catches up to the stagnation of this year. So we'll probably see that continue to go down and maybe get into the single digits for 2023. Is that probably fair?
I think so, yeah.
Okay.
For sure. I mean, I would bet on it.
Okay.
I'm not a big bettor or anything, but a couple bucks, I'd bet.
All right. So that's the market. Kind of where we're at. Trajectory-wise, we're not racing forward. We're really not in free fall. We're just kind of hanging out. Interest rates have also been hanging out there. Mid-sixes as we record this.
I was going to say, so as we record it today, that's another thing with the buyer sentiment over the last month or so is that 30-year fixed rates peaked at, call it, mid-sevens, and then they have backed down to the mid-sixes. Yeah. So that's one thing going on. Another thing going on is this, not everybody knows about it, but it seems to be a more and more common conversation about like interest rate buy down and what is called like a 2-1 buy down or a 3-2-1 buy down. Do we want to take a minute and talk about what is a 3-2-1 buy down?
Yeah, I mean, lenders are asking themselves, some lenders, how do we help buyers overcome a 6.5% or 7.5% interest rate to make things more affordable, get them into a home. So we've talked about about a 3-2-1 buy down with some lenders that we've worked with. Give us like the really quick summary of what it actually means and how it could help someone who's looking to buy but is maybe has a hard time with that 6.5% number, even though that is down from where we were.
So if I'm paying 6.5%, but my expectation is that interest rates could be down to 5.75%, 5.5% in anywhere from 9 to 36 months from now. Then, and even if not, this 3-2-1 buy down could make sense. But going back to what problem does this solve? It solves the problem to say, I can lock in at 6.5% today, but then I either have to refi, and I'm paying 6.5% in the meantime. So a 3-2-1 buy down essentially is to negotiate for the seller on a home I'm buying to set aside money with the mortgage company. How much money do they set aside? They set enough money aside so that essentially my payments for 3 years are subsidized. Meaning, this is just round numbers. Let's say my payment is $3,000 a month at a 6.5% rate. Whatever that payment would be at 3.5%, the 3-2-1 comes from the interest rate. First year, it's 3% less. Second year is 2% less. Third year is 1% less. So $3,000 payment at 6.5%. Whatever that payment is at 3.5% is what I pay for the first 12 months. And so on and so forth. So second year is 2% under what I would lock in. Third year is 1% under, and then the fourth year is the 6.5% rate. So the rate on my mortgage papers is 6.5%, and we're negotiating in for the seller to essentially subsidize my payments down. Yeah. Why would you do that? It's because the expectation is that, it's funny too, side note is, a lot of these things that sort of become more prevalent, sort of always like a rate buy down. Whether a rate's at 2.5 or 10.5, you can always buy a rate down.
Sure. It's not on everyone's radar all the time, though.
It's just funny, it's interesting rather to see what pops up as like, let's see if this works for people feeling better about buying or whatever. So anyways, so it's the 3-2-1. Your mortgage papers are locked in at 6.5. Why would you do that? It's because the expectation is that rates are going to go from 6.5 at some point in the next 9 to call it 24 months to where I can refi. And a lot of the lenders, certainly the lender that we work with quite a bit, is offering to refi at no cost.
Yeah.
So if my issue is,
if you originate with him,
yeah, if my issue truly is affordability, this is a mechanism where my payment is now more affordable with a high likelihood that I can refi in a year and a half. So that's what a 3-2-1 buy down is if you see it or hear about it.
So I'm a buyer. It's we'll call it 2023. For 2023, my payment is functionally going to be 3.5. And then let's say mid 2024, rates are down to 5%, 4.5.
Yeah.
I can then refinance my loan.
Yes. It pays
into the new rate.
It pays the 6.5% loan off.
Yep.
That's done. I'm now at the new lower rate.
Yeah. So if I was in a buying situation waiting for rates to go down,
yeah,
it makes total sense.
I'll be honest. If that's why I'm not buying, this totally removes that as like.
There's no reason anymore, as far as the rate specifically.
There's no reason.
Yeah.
Yeah. Okay. There's other reasons. There's other reasons that people are hesitant, which I can appreciate. I might watch this video 1,000 times and I'm still not convinced that the free fall is not coming tomorrow.
Yeah.
And I don't want to be the idiot. Nobody likes to feel like an idiot where they buy, where they feel like they're buying high.
Yeah.
So.
Can't time the market. We've talked about that in the past. Ultimately, you say it often. What is it? If you can afford it, if you want to, you can afford it.
It's whether you can afford it, go ahead and buy it.
Buy everything you can afford is what you just said.
Yeah. No, the principles always go back, and that is like if you have a good reason to buy it and you can afford it, it's probably a good thing to do as long as you have a long-term view. Mm-hmm. That's the other thing we need to keep telling people, because the way that we have been thinking over the last several years has been, how many people do we know who have contracted a new home to be built, and by the time it's done being built, the price in the market is so much higher than what they have committed to pay, they don't move into it. They stay where they are and they sell the home.
Just sell it. They flipped a new build, basically.
They flipped a new build.
Joke's on you, man. That's amazing.
So that's not uncommon. That hasn't been totally uncommon over the last couple of years. That is very unusual. Mm-hmm. Very unusual. Probably no other time in the history of modern real estate has that ever happened. May not ever happen again. People need to be thinking, am I okay owning this home for 7+ years?
Yeah.
I may rent it. I like that idea. So I'm open to doing that, and I can afford to do that. And it is aligned with my long-term real estate and investment goals. Yeah. But yeah, if you have a good reason to buy it, and you can afford it.
Yeah. Cool. Anything else before we wrap this one up?
That's it.
Awesome.
Next one we do will be the New Year. So Merry Christmas and Happy New Year.
Yeah. One thing that I know can be a little challenging is to translate the general market into what does that mean for my home specifically. And there's a lot of variables involved in that. But for those people that really do want to know, let's talk about my property.
Yeah.
Let's talk about my situation. And I've got some questions as far as how to proceed.
Yeah.
we offer a real estate review
We do.
that goes through a lot of those things. It's not a backdoor way for us to try to convince anyone to sell. It's genuinely like,
Yep.
how can we help you make the most of your property, your equity, and do some long-term planning?
Yeah.
Anything you want to say on real estate reviews?
Yeah, I appreciate you bringing that up. It's not a disguise for, I hope these people actually end up selling.
I think you would probably usually say, if you can afford to keep the home and rent it out, that's probably the best route most of the time.
The best real estate route is this, is buy the least expensive home that you can tolerate and take all your other cash and invest it. And never move.
Yeah.
Never incur taxes. You don't have to worry about commissions. You don't have to move any boxes.
That's a big one.
But that's not the reality we live in.
So the advice won't be you should sell, and it won't be you should stay in this place forever.
Yeah, so our goal is for our clients and us to have a kind of trust in our relationship, that they see us as an advocate for them and they see us as their realtors for life. And this is one of the ways that we sit down with people and really have just conversations. Like, I'll have conversations with various people over time that this is just an intentional way to say, hey, it's something we offer. It's no obligation, and there's no tricks or like whatever. Yeah. It's just like, hey, here's some things that, being in this business for 15 years, being very intentional about it over the last several years in terms of like, what can I do with my equity and opportunities there? I would want to know those things. Right. It's our attempt at doing for people what I personally would want done for me if I wasn't in the business. So if that's something that interests you, yes, reach out, text, call, and we'd love to set something up and have a chat.
Yeah. If you have found this content helpful, please share it with someone else who might find it helpful. Subscribe wherever you're getting this content, and we'll see you next time.
See ya.